This means that the emerging categories, which is the premium side of things, are picking up, and which is also aiding their margins. And the online reach has now grown by over 30%, which is also adding growth to the revenue. In terms of the Star business, well, Star business has also picked up in the last quarter. The like-for-like growth was over 20%, first time in double digits. And in terms of now, just to give you a brief about what brokerages are saying about trend. Well, Kotak expects the rollout in the next 1 to 2 years, and what they're saying is that this reinforces cautious stance on Titan. So while Tata is not going into lab-grown diamonds directly, it is definitely going indirectly via trend, but this will add a dent overall to Titan. And they're expecting an impact to weigh on Tanishq studded segment, which will overall impact Titan's margins. In terms of what pricing it will be launched at, well, 1 carat solitaire ring will be priced at around 24,000 to 29,000, which will be much lower as compared to the natural diamonds, and this is implying an underlying retail price of roughly 15,000. Now, in terms of POM, it has a potential. This was, in fact, the highlight of the note. What Kotak believes is that POM has the potential to be the Zudio of lab-grown diamonds jewelry market. Now, in terms of the valuation bit, of course, Trent is not a cheap stock. It's a very expensive stock. Even if we see the Bloomberg estimates for FY 25 estimates and 26 estimates also, it is expected to be trading at 102 times. And in fact, if we take the retail stocks which have had a market cap of over 2 lakh rupees, Trent is the most expensive one, trading at a PE of 151 times, followed by Avenue Supermarts at 90 times. So all in all, of course, the stock has seen an extremely good momentum, but of course it remains a much expensive stock.
Well, expensive is relative. Lab-grown diamonds is a very, very interesting play, and especially an interesting play, I think, because a lot of, I would say, the jewelry companies that we speak to, gold jewelry companies we speak to, keep telling us that there's no demand for lab-grown diamonds, and here comes Trent and plunges head first into this space. Aditya Shah joining us this afternoon. He's founder at Hercules Advisors. Aditya, great to have you on. Now, just before I come to you on your take on Trent, just quickly to highlight the Tata Motor numbers which are out there. Passenger vehicle global wholesale numbers are down 6% year on year. The numbers are not looking great, let's be honest, and you're seeing a bit of a slide there. The global wholesales overall is 11% down year on year at 3.04 lakh units. And of course, the passenger vehicle ones are down 6%. Let's start with your take though on Trent, and then we'll move to Tata Motors. Let's talk a bit about Tata Group stocks this afternoon. Aditya, hi.
Hi, good evening. So I found the Kotak report very amusing because they have a sell on Titan, which is trading at about 100 times multiple, and they are bullish on a stock which is trading at about 150 to 200 times multiple, saying that the growth could be faster. Investors should be careful, really very, very careful on both of these stocks. Both of these stocks are extremely expensive, as is with all Tata companies, especially with Trent. Trent, of course, they've done really well with the Zudio ramp up that is happening. Zudio is now even bigger than what Westside really is. And now with this lab-grown diamond news really coming about, it is good for Trent per se. However, if you look at the valuations per se, I don't see any margin of safety there on the valuation. Even if Trent was to undergo time correction of over the next 1 or 2 years, still the stock is extremely cheap. Growth is there. However, the valuation is extremely crazy on this stock. I would advise retail investors to stay out of this euphoria and try to go and invest in other stocks, other Tata Group stocks as well, where the valuation is at least saner and not insane as the valuation on Trent really is.
Okay, 8026. Aditya, every time somebody's written an obituary for Trent, and every single point of time the valuations were expensive. You pretty certain you want to book profits here?
No, I do not want to book profits here. I want to hold on to whatever I'm holding. Class companies will continue to compound even if they are expensive. But you would not like to initiate new positions on the stock at this stage. If there is any correction or if there is any blip in growth for 1 or 2 quarters, that could be an excellent opportunity to add. But right now, this is wait and watch stock buzz.
Okay. Trent is wait and watch. Kush, your take on Trent?
Yep. So as I just mentioned that just the week's profit booking that's happened, it's put trend from a technical standpoint, at least in a very comfortable zone. The recovery is on the back of good volume, so I think it would continue to hold on. The 20-day moving average will around 7,500 will sort of act as a strong support zone. On the way up, 8,550 also in a couple of months' time, is very likely to continue holding on to trend. Doesn't seem as there's too much trouble here, especially from a technical standpoint now.
Okay, we also talked about Tata Motors briefly. Aditya, I wanted your take on Tata Motors. And, how are you looking at it? Passenger vehicle numbers have not been good. The JLR numbers and updates we got were also not too positive for Tamo. In the auto pack, how would you look at a Tamo versus a Mahindra and Mahindra, for example, which is in focus today thanks to CLSA?
In my opinion, the automotive sector, not only in India, but even in Europe and US, is undergoing a massive slowdown. And we've already seen within the Tata Motors numbers, the European numbers are not too great also. So in my opinion, you need to be very careful on the automotive stocks per se. Here, my top pick would be Mahindra and Mahindra because they are doing excellent work on their PV business as well as their agri business is also doing extremely well. That will be my top pick, followed by Tata Motors, and then there will be Maruti. We will need to see how Hyundai lists over a period of by the end of this month, and then take a call on where to invest. However, auto ancillaries look very interesting to me, where a lot of correction has played out. So somebody like Motherson looks really very interesting to me at this stage.
Motherson looks very interesting to you. Kush, how are you feeling about Tata Motors?
Well, the move hasn't really been encouraging, to say the least. Now, the long-term support for this one actually comes in at 880. Now, the low that we've seen today is also around 890, 895 odd levels. So I think there's some more room on the way down. And even then, I wouldn't really go out and venture a trade just yet. I just want to see if it does hold that 880 level. Very comfortably trading below the 200-day moving average. So not a very comfortable sign for a trader or an investor. So watch for the key level of 880. If that is held, then perhaps you could see some sort of sideways consolidation come in. But if that is broken, then further levels on the downside very very much likely. So no revival just yet on the cards. Key level to watch is 880.
Okay, we'll talk about the other big mover, which is Paytm too. But I think it's time to move on to the key brokerage note of the day because that too has gotten the underlying stock moving, and that's